China has actually controlled the market. Not only is it the second largest nation by mine output, but also it's been importing doré and other base metal ores for refining, and so is the largest refiner of silver in the world by long. So controlled the market, and it's managed to suppress the price for a long time. Then President Trump came into the scene, and he started monkeying around with tariffs, China, threatening them this, threatening them that, 150% tariffs, and so on and so forth. So what did China do? Turned around and said, well, if that's your game, we'll stop supplying you with the things you need. And they started with the rare earths. From next month, officially this is the case, and I think it's probably already de facto the case, China is restricting the licensing of exports, silver exports, out of China. And the reason for this is quite simple. It recognizes that it can no longer control the price.
Alasdair Macleod, a respected monetary historian and market strategist, explains how China has long controlled the global silver market. As the world's second-largest silver miner and largest silver refiner, China imports doré and base metal ores, giving it enormous pricing power and the ability to suppress silver prices for years. However, that control is now shifting. Following aggressive U.S. tariff threats under President Trump, China responded by restricting strategic exports, starting with rare earths and now silver export licensing. According to Macleod, China recognizes it can no longer manage silver prices, signaling a potential structural shift in the global silver market. Now, we present the clips from Alasdair's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
China sorting out its currency, making sure that the purchasing power of its currency doesn't slide along with the rest. That's going to be against gold, not against silver. So silver is very different. The demand for silver has just gone off the charts simply because you've got the photovoltaic cell industry and really as part of India's environmental credentials to offset the use of coal-fired power generation. I mean, they've opened an enormous number of coal-fired power stations. They're subsidizing businesses, the big conglomerates like Reliance Industries, to go and make photovoltaic cells. And so the production of these things in India is beginning to really ramp up. So where does the silver come from? The other question we have to ask is that the new Samsung car battery, motor vehicles consume something like, the batteries consume something like 25 grams or something of silver. The new generation of Samsung car batteries, which don't use lithium, but use silver carbon anode battery, they consume something like a kilogram. Now, these are the new batteries, and they give you more range and they charge quicker. So this is going to go into luxury cars by the end of 2026. So you can see that any manufacturer in the electronics industry, in the environmental industry, in the motor industry, has got to go out there and grab as much silver as they can because there isn't very much around. Mine supply is roughly 820 million ounces a year, about 25,000 tons. Of that, almost 70%, somewhere between 65 and 70%, comes not from silver mines, but from other mining activity, copper, zinc, lead, tin, whatever. So, they're not going to increase in terms of supply. That is for sure. So the supply is pretty fixed. You've obviously got scrap silver, but scrap silver is probably declining as an element in the whole thing. We've found in India, for example, that rising prices have not shaken out scrap silver, which was, I think, generally unexpected. You would think that ordinary people, with bits of silver here, there, and everywhere, sort of get it together and then take it down to the local shop and sell it but they don't want rupees. But whatever. We can speculate why they don't want rupees. I think we can guess why they don't want rupees. The rupee hasn't exactly had a glorious history as a fiat currency. So, supplies are very limited. Now, in the past, China has actually controlled the market because not only is it the second largest nation by mine output, but also it's been importing doré and other base metal ores for refining. And so is the largest refiner of silver in the world by long. So it's controlled the market. And it's managed to suppress the price for a long time. Then President Trump came into the scene and he started monkeying around with tariffs on China, threatening them this, threatening them that, 150% tariffs, and so on and so forth. So what did China do? Turned around and said, well, if that's your game, we'll stop supplying you with the things you need. And they started with the rare earth. From next month, officially this is the case, and I think it's probably already de facto the case, China is restricting the licensing of silver exports out of China. And the reason for this is quite simple. It recognizes that it can no longer control the price, and therefore it needs to retain as much silver as possible within China, because this is becoming, they will know that the price has got to go a hell of a lot higher.
Global silver demand is accelerating as supply tightens sharply. Photovoltaic expansion in India, electric vehicles, and next-generation batteries are driving unprecedented industrial consumption. New Samsung silver carbon anode batteries alone may use up to 1 kilogram of silver per vehicle, compared to grams previously. Yet mine supply remains fixed at roughly 820 million ounces annually, with nearly 70% coming as a byproduct of other metals. Scrap supply is declining, even in price-sensitive markets like India. Meanwhile, China, historically the largest silver refiner, has begun restricting silver export licenses, recognizing it can no longer suppress prices and must retain strategic silver domestically. Let's get back to the interview.
Where does India go for its silver? Well, it goes to COMEX, and it stands for delivery. I mean, this year so far, just under 15,000 tons of silver. Roughly 60% of global annual mine supply has been stood for delivery on COMEX alone. And then you got London. I mean, this is a huge, great liquidity issue between the derivative markets, where silver is traded and obligations are out there in many multiple, several hundred times the availability of the underlying silver. And that's coming to an end. And as that comes to an end, where does the price of physical go? Well, how high? It's going, it's a good classic commodity squeeze. And we're seeing the same thing, basically. I would argue to a lesser extent in platinum and palladium, particularly platinum, which, I mean, in that case, I think the platinum price has been suppressed for a very, very long time. You've got very few manufacturers, mining entities, which produce any reasonable quantities of platinum and palladium. Traditionally, it's been South Africa and Russia. And Russia is sanctioned. What good does that do? So the whole thing is, this is a mess. And I'd throw in something else about these metals. I mean, silver I regard as operating as a base metal, if you like, with some sort of psychology about, being a form of money on top. The underlying situation is that if you look at the value of base metal, valued in gold, not in fiat currencies, because the value of everything in gold basically is pretty constant over long periods of time. Fluctuates a bit, but not nearly as much as it does in fiat currency. What's happened is that, a sensible basket of these base metals is worth roughly 18% of what it was in the year 1900. In 2008, since then, I mean, it's because I was calculating it for copper, the value of copper since 2008 measured in gold is 8% of what it was then. But this is disguised by the falling purchasing power of the dollar. I mean, you look at the dollar chart of copper and it's going up and it's breaking into new high ground and all the rest of it. But it's just picking up off the bottom in gold. This is the importance of something I was saying earlier, and that is that gold is front running. It is anticipating what's going to happen to the dollar in 2026. It's anticipating as far as it can see, which I don't know. Could be only 3 months, 6 months, might be a year. We just don't know. But you can see now that if the price of copper is going to normalize itself in gold, then that is going to go up in gold 4 or 5 times. How much will it go up measured in declining dollars? I mean, 5 becomes your minimum. Don't be surprised to see it over 10 times. Don't be surprised to see it over 20 times. What I'm trying to say is that the whole of the fiat currency regime has distorted the relationship between money, by that I mean legal money, which is gold, and commodity values. And that's going to correct, and it'll correct big time.
Physical silver demand is exposing a growing crisis in global metal markets. India is increasingly sourcing silver through COMEX physical delivery, where nearly 15,000 tons, about 60% of annual global mine supply, has already been stood for delivery this year. This highlights a severe imbalance between paper silver derivatives and available physical metal. As this leverage unwinds, prices face a classic commodity squeeze. Similar distortions exist in platinum and palladium, constrained by limited producers and sanctions. Valued against gold rather than fiat currencies, base metals remain historically undervalued, signaling a major repricing as fiat distortions unwind. Share your thoughts on their analysis in the comment section below. Please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.